engineering services market, specifically in the full vehicle space. We really don't overlap or compete with too many of the other Indian engineering service providers. We typically compete when we are targeting full vehicles. We typically compete with German engineering service providers and French and American engineering service providers. One of the things that differentiates Tata Technologies again is that we are not an India out company. We've got a very balanced onshore-offshore proposition, and so we have our teams that are very close to our customers, and that allows us to manage the stakeholder groups that are critical to the development of ACES.
And any other delivery centers that you plan to open in any other geography coming up?
Well, we're open to opening delivery centers in areas where our customers are, and we're also open to developing or launching delivery centers in specialist resource pools. And so, if we look at what we've got today, we've got capabilities in Sweden that has tapped into the safety and the autonomous driving capabilities that are available to us in and around Gothenburg. We've got vehicle engineering capabilities in the UK and in India and in Shanghai. We'd certainly be open to expanding our footprint in Germany. We're very respectful of the capabilities that exist there. We've got offices today in Ingolstadt and in Hamburg. We'd certainly be open to expanding our footprint there because, again, they have a very rich resource pool of automotive talent. Japan too. We've got an office today in Japan, but it's a very small part of our overall capabilities, and we certainly are ambitious in terms of growing the relationships with customers in that region.
Can you please share the IPO details?
The IPO details, Tata Motors have almost 65% of the ownership of the company today. They are selling 11.4%. The remaining 3.6%, which makes up the offer for sale, is coming from the two funds that are managed by Tata Capital. And so there's about 15% of the company that is available for sale, and we're working through the building of the anchor book and targeting the investors that are going to come into the organisation to make up the capital structure in the future.
What are your expectations from this launch of this IPO from investors?
From investors, the Tata Group, I think, has a long track record of ensuring that value is delivered to investors, and so we are very much taking our responsibilities in that regard very, very seriously. I think for us as a company, although we're not raising any capital, this is a pure OFS, this is a pure secondary offering, but we are hoping that the profile that this will afford us will certainly help us reinforce the relationship with our customers. We're also hoping that it will act as a magnet for talent. We're committed to recruit and retain the best and the brightest in this market, and we're hoping the profile that this will afford us will certainly reinforce our commitment to doing just that.
We welcome you all to the press conference convened to announce the launch of IPO of Tata Technologies Limited. We thank you for taking the time to attend this important event in the growth journey of the company. Over the next hour, we will brief you about who we are, what we do, what are our growth strategies, and also details of the IPO, and address any questions you may have. With us today, we have key members of the Tata Technologies management team. May I introduce Mr. Warren Harris, Chief Executive Officer and Managing Director, Tata Technologies Limited. Savita Balachandran, Chief Financial Officer, Tata Technologies Limited. We also have Mr. Rahul Chaudhary, Director, Equity Capital Markets, JM Financial Limited. I would like to invite Sher Singh, the Security Advisor of Vivanta by Taj Hotel, to take us a quick briefing for the safety rules. Mr. Sher Singh.
Ladies and gentlemen, kindly attention please. A very warm welcome to the guest delegates present today at Taj Ahmedabad. I am Sher Rathod from Security. Will brief you about the hotel safety and security. Our hotel is well equipped with fire safety equipments and access control system at place. The hotel premises are manned by trained security associate at all times, and these fire exits are open for further lease to safe assembly area. In case of any emergency, you will be intimated through our public address system or by our benefit associates. And kindly note that no mock drill planned for today. In case of any medical emergency, we have first aid and doctor on call. The instruction is being given to you just as a precautionary measure. There is no cause for concern. Thank you and have a great day.
I would invite Mr. Rahul Chaudhary, Director Equity Capital Market GM Finance, to make the opening remarks.
Thank you, Rico. Good morning, everyone, and Happy New Year and Happy Lakpaja in advance. It's an honor to welcome you all for the press conference of Tata Technology IPO. Yes, it's an IPO from Tata Group after almost 2 decades. Exactly 19 years and 5 months after TCS last IPO in 2004. Hence, we see tremendous amount of excitement around the IPO. Let me use this opportunity to briefly talk about the company. Tata Technology is a leading global engineering research and development services company known for its cutting-edge technology and innovation, leading the charge in shaping the future of automotive. It's a global organization with 19 delivery centers across the world and over 12,000 employees, bringing together diverse teams to deliver outcomes for its customers. The company enjoys the trust of marquee sets of clients across anchor clients, traditional OEM, and new energy vehicle companies like JLR, Tata Motors, Airbus, McLaren, Honda, Ford, among others. The IPO is a crucial milestone for the company, and it's reflective of not just the company's immense success, but Tata Group's commitment towards driving technological advances in the global marketplace. I'll just briefly talk about the IPO structure. The price band for the issue is 475 rupees to 500 rupees. Issue size at the upper band is 3043 crore. It's 100% offer for sale, no primary component here. Out of 3043, there's a reservation for Tata Motors shareholders for 10%, so 304 crores of at the upper band of the price range, and 3.3% for the Tata Technology employees, around 101 crore rupees. In terms of categories, QIB category, it's a 6-1 IPO, so up to 50% of the offer size will be reserved for QIB, so that's around 1318 crore. For the non-institutional tranche, it's 15% of the net offer size, so 395 crore at the upper end of the price band. And for the retail investors, it's 35% of the net offer size, so 23 crores. The timelines for the IPO: anchor will open on 21st and close on 21st. Issue will open on 22nd and will close on 24th. Now, before handing it over to Warren to take us through the journey, we'll play a quick video and then we'll hand it over to Warren.
Your interest in our company. As the video and the introduction suggested, Tata Technologies is a pure play engineering services company. Everything that we do is focused on the manufacturing sector. Our purpose as an organization is to engineer a better world, and we do that through helping our customers realize safer, cleaner products that improve the quality of life for people around the world. We are managed around 2 divisions, professional services and technology solutions. Our professional services division makes up over 80% of our business mix, and it's divided into 2 components. Product engineering services, so these are services that we deliver to our customers to help them generate and realize great products that they sell to their customers. And our services in this area extend from the provision of people, the standing up of offshore development centres, all the way through the turnkey outsourcing of complete products, and specifically electric vehicles. The second component of our services value proposition is we also work with those same customers to help them select and deploy the technology on which new products are built. Inside of our technology solutions division, so this is about 20% of our business mix, we maintain the relationships with the software vendors that provide technology to the manufacturing sector through value-added reseller agreements that we have in North America and in India. And one of the constraints to technology adoption in the manufacturing sector is the availability of relevant skills, and we address that through our education proposition. In terms of the size of the company, we're about 12,500 people, and we're managed out of 19 different delivery centers that we position around the world. One of the things that differentiates Tata Technologies, particularly in the context of other engineering service providers here in India, is that we do not represent an India-out proposition. We are very much a global organization. When we're entrusted to develop next-generation products for our customers, one of the requirements is that we develop real strategic customer intimacy with those customers. And so the presence that we have onshore, close to our customers, is an integral part of how we realize that. One of the things that also differentiates our organization is that Zinnov, the industry watch organization that ranks engineering service providers, has consistently ranked Tata Technologies as the #1 automotive engineering service provider here in India, #3 globally. And in the emerging electric vehicle space, not only are we #1 here in India, but we're #2 globally. And we're investing very aggressively to be the #1 electric vehicle engineering service provider in the world. In terms of numbers, last year we delivered $547 million of revenue. In the first 6 months of this fiscal year, we've improved that to $306 million of revenue. Last year, our operating margins were 18.6%. We have a very healthy balance sheet. We're debt-free, and we have a very healthy cash position on that balance sheet. In terms of the history of the organization, our history can be defined around 3 phases. The formative stage of the company was really defined by the partial outsourcing of engineering and IT at Tata Motors. That happened in the mid-90s. The company here in India provided almost exclusive focus to supporting Tata Technologies until 2004. And after 2004, the company acquired a company that I was a part of, Incat International, that had just gone public in London. And the rationale for the convergence of the 2 organizations was the customer base that Incat had established in Europe and North America was positioned as a complement to the capacity and the capability that had been established here in India by Tata Motors. The completion of the post-merger integration activities of those 2 organizations coincided with the acquisition by Tata Motors of JLR in 2008. It also coincided with the onset of the financial crisis. So the second phase of our evolution as a company was really focused on providing support for Jaguar Land Rover. Jaguar Land Rover was encouraged to take advantage of the Tata Group resources here in India in order to be able to deliver the cycle plan that it had defined for itself. And we were one of the primary beneficiaries of that. That allowed us to build a value proposition at scale, and that extended all the way through the complete outsourcing of a vehicle. The first vehicle that Tata Technologies was responsible for developing was the Discovery Sport. We launched that product in 2014 at the production facility of JLR's in Halewood in Liverpool. And every single component and subsystem, everything that you can see and touch on that vehicle, Tata Technologies was responsible for engineering. In 2014, because of the bow wave of opportunity that we had at JLR, the majority of our services was delivered to Tata Motors and to JLR. Since that time, we've taken our value proposition to the market outside of the group. And last year, the aggregate contribution of Tata Motors and JLR to the overall revenues of Tata Technologies was less than 33%. So the first phase was the formative phase. The second phase was really scaling our capabilities inside of the group. And the third phase was taking that value proposition outside of the group to the broader market. In terms of the overall market, the global ER&D market is about $2 trillion. The addressable space for engineering service providers is about $100 billion. And India contributes about 25% to that addressable market.
Year ahead, and once again, thank you for being here with us today. The next couple of minutes, I want to just take you through some of our financial numbers. The business operations that Warren shared with us is, we believe, has helped us build a business that has a financial profile underpinned by very, very strong top line growth, very solid margins, and very, very robust cash flow positions as well. A quick snapshot of our most recent financial results that we've announced for the first half of this fiscal year. We've had a very good growth at about 34%, clocking a top line of 2,500 crores for the 6-month period, and much of that is being underpinned by growth that we've seen in our services segment, which has grown by about 21% year on year. Margins, we reported EBITDA numbers of about 18.4%. It's also flowed through to our bottom line, and we've had robust PAT margins at little under 14%, and this number represents almost 400 basis point improvement in the last 3.5 years. So this combination of good growth at the top line and improving margin profile has helped us to build a company that's net cash. We have no borrowings on our balance sheet. When we closed our books in September 30th, we carried about 1,000 crores of liquidity on our books, and this is after paying the 500 crores of dividends that was announced by the board and approved by our shareholders earlier part of this year. So as you can see, the free cash flow generation is therefore very, very good. In the last year, fiscal 23, we had about 760 crores of free cash flow that we generated in the business, and that represented over 92% conversion of our EBITDA. And this slide shows you the journey that we've undertaken over the last 3.5 years. If you look at our revenue numbers, the year of the pandemic in fiscal 2021, our revenue was roughly under 2,400 crores overall. From there, we've grown the business at a cumulative average growth rate of about 36% in the last 3 years to reach 4,400 crores of revenue from operations in both our services and technology solutions segment. That represents about 48% growth between fiscal 21 and 22 and about 25% growth thereafter from 22 to 23. And as you've seen in the previous slide, we maintained that growth rate in the first half of the year as well. Of course, that also means the base has significantly grown at this point in time. Much of this growth, we're delighted to say, is driven by our 80% business, which is the services business, which drives much of our financial performance. And that services segment has reflected the 36% growth that we've seen in the overall business. And much of that has come from our area of domain expertise, which is the automotive vertical, that grew by almost 41% during this period. Technology solutions as a segment, again, I think that also continued to reflect a very, very robust growth, and much of that has been defined by the education business that we are incubating at this point of time within our organization. This growth in top line during the last 3.5 years has been very well complemented by a lot of operational efficiencies that we've been able to drive within the company as well, and that's reflected in the EBITDA margin expansion, as you can see. In 2021, we saw 16.2% EBITDA margins within the company, and over the 3.5 years, we've been able to expand that to about 18.4% for the first half of this fiscal year. And while this has benefited from growth in revenues, it's also been significantly improved because of the focus that we've brought into operational levers like keeping very, very high levels of utilization, looking at increasing offshoring mix. Today we are at about 50-50, and we do believe that there is headroom to improve this further. We've also significantly looked at improving our unit cost of delivery by improving our people pyramid, and many of these efforts are ongoing within the organization. And the improvement in EBITDA margins was also further supplemented by the fact that we are a very capital light business model. So our depreciation costs have not significantly increased even as we've grown our business. And that operating leverage has helped us to now deliver and expand also net margins at the bottom line, which, as you can see, again has grown by roughly about 400 basis points from 10% in fiscal 21 to 13.9% when we closed our books in the first half of this financial year. And once again, to reiterate, the combination of growth and profitability has helped us to build a business that's not only cash positive, but helped us to continue maintaining us as a debt-free company with a very, very solid balance sheet. With that, I'll open the floor to a lot of questions and we'll be happy to answer anything that you have for us. Thank you.
Yes. I have a question that what percentage of...
Can you hear me?
Yeah.
We've been in Japan since the late 90s. I helped set up a joint venture there for Incap before we became Tata Technologies, and so we've been working with Honda and Nissan and to a lesser extent Toyota and Mitsubishi for over 20 years. The Japanese have been somewhat reticent to embrace offshoring. They prefer to do a lot of the product development work in Japan themselves. You know, there are examples of where they've invested in India. Renault and Nissan have a captive center in Chennai that we support, but they've not come to India at scale. Our view is that will change. The requirement to bring in skills, particularly around software and technology, will require that the Japanese companies have to reach out. And India, I think, is much better positioned than any other geography. So we think that the resistance that they've shown over the last 20 years will start to dissipate, and we'll start to see them come at scale. We also think that the Germans will do exactly the same thing. Again, Mercedes came here 30 years ago. They built a captive center at scale, but all of the other German OEMs have really resisted coming to India, and we are starting to see signs again that will change. And the investment that we've made onshore in building the relationships with the Japanese OEMs and the German OEMs, we believe that will ideally position us when they make the commitment to leveraging the resources and the capabilities that are increasingly available here.
Who is your competitor?
Who's our competitor? If you look at different parts of our portfolio, we have different competitors. When it comes to full vehicle development, so when we compete for either a platform and top hat development or just a top hat development, and top hat is the upper structure on the vehicle. We typically compete with the Germans and the French and the North American ESPs, engineering service providers. We do not come across any competition here in India in the full vehicle space. When it comes to standing up offshore development centers, then we overlap and we compete with not just the Indian engineering service provider companies, but also the IT services companies, the likes of TCS and Infosys and Wipro and HCL. When it comes to the digital side of our business, so these are the services that we provide to customers to help them deploy technology to optimize the way in which they run their enterprise. We come up against the Indian IT services companies, but also the likes of Accenture and Deloitte. We differentiate ourselves in that area because we are practitioners of the tools that we deploy. We use the same tools in the product engineering space. So we have different categories of competition in the different parts of what it is that we do.
How much spending for R&D per year?
How much?
spending of revenue from that? How much percent?
Well, typically a vehicle OEM, manufacturing company, will spend between 4 and 8% of revenue on R&D, and that aggregates across all of the different sectors to about $2 trillion. That's the global ER&D market. What's outsourced is only about $100 billion. But what's exciting for us is that the addressable space for engineering service providers is growing at a faster rate than the overall market, and the contribution from India is growing at a faster rate than the addressable market.
Why is after 2 decades you are coming IPO? Too late.
It's too late. I think you'd have to go and talk to Mr. Tata and the current group chairman about that. We think that we are ready. We think that we built up a track record of success. We've demonstrated the value that we can deliver to the overall ER&D market, and we think that the ER&D market is poised to follow what's happened in the IT space. And so we think it's the right time for us to expose ourselves to the scrutiny of the public markets and to enjoy the support that a higher brand profile will deliver to us.
This is Diwali Bonanza for Indian economy.
I think that's right.
How much of its holding is Tata Motors selling exactly?
Tata Motors is selling 11.4%.
So you'll still retain 90%, 89%?
No, see the current holding before the OF is a little under 65% of Tata Motors, so they would have more than about 51-52% holding continued in Tata Technologies.
Hello, hi, good morning. As I said in the presentation that currently 33% of the revenue comes from Tata Group companies and rest is from outside group companies. Going ahead, what do you expect, how will the percentage change?
Somewhat counterintuitively in the next couple of years, we think that the contribution from JLR and TML may jump up because of the public statements that they've made in terms of increasing their capex and investment in new vehicles. But I think medium to long term, then the diversification away from group companies is likely to continue, in part because of the wallet share that we enjoy inside of both of those companies. You know, we enjoy a considerable share of their outsourced ER&D spend, and the opportunity to grow that will